Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng, a very mild cut, 0.06%. Taiwan index is down almost 0.2%.
I think we're talking about a matter of weeks. Our expectation is that any effects we see will be short-lived.
So U.S. struck near Iran's key export hub at Kharg Island. Flat to slightly lower, maybe in the green. Yeah, in the green. 23,200, a third of a percent higher. So there is a bit of a bounce afoot.
We are aligned with the U.S. in some sense because I don't think even Trump wants higher energy prices.
While we do understand the hit only has been at the military bases and not oil facilities.
Today opened with a gain, stayed in the green for a bit and then has sold off quite strongly, in fact.
HSBC has downgraded all the three names. And second, over the weekend, Election Commission has announced election dates for some of the states.
Domestic flights, what's this charge come in? It is at around 425 rupees, while for international routes, it could cost as much as 2,300 rupees additional.
As per sources, there were two prominent bidders. First is Fairfax and second is NBD, Emirates NBD.
Look at the prices of propane or any of the derivatives that people are paying, packaging material. All this hits at the wholesale level first.
Nomura has lowered the Nifty year-end target to 24,900.
There is a possibility of Ather Energy getting PLI, that is Production-Linked Incentive Scheme.
The market regulators' heavy stand was very clear that they want to move towards deepening the commodity derivatives market, expanding the commodity derivatives market.
The mid-caps, so the broader markets which are not doing so well. So that is one index that should be on your radar. It's down 700 points as we speak.
Well, there is a recovery afoot and a strong recovery afoot as well. Let's just look at the Nifty straight up in terms of where we are at. This is closing bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. But I just want to quickly put up the Nifty intraday because that is where all the action really is coming through. So that's the surge that we are talking about. 6 minutes flat. I mean, the market basically jumped about 200 points. And I'll tell you exactly where the move started in that sense at about 218. 218, just a one-way move to about, 228 or so. And we were at about 23,350 or so. So that's about 200 points straight. And if this builds on, I mean, it'll be, I think, even larger as we come in. So this is quite something. I mean, the most natural kind of urge is going to be to look at what has happened if something has really come through, which is leading to this kind of surge. What I mean by that is, of course, news flow, but I don't think there is anything, at least not that what we can pick up on the wires, etc. We will be on the lookout for it, but so far nothing. Ultratech is the biggest gainer with a 4% surge. Let's just look at the stocks. Mahindra is up about 3.5%. Grasim is up 3%. Bajaj Finance and Eternal and HDFC Bank are some of the other stocks which are surging about 2 to 3% or so at this point in time. So that's the picture, and it's a strong bounce. Tomorrow, of course, also is the expiry, Nifty expiry, and ahead of that and perhaps into tomorrow, you will see some short covering, etc. I mean, the markets, of course, extremely light. It is also short, so it kind of takes little for the market to go the other way in a fast and furious way. And I was making this point earlier as well. I mean, moves are easy. I mean, slicing like a hot knife through butter. I mean, both on the way up and then quite easily sliding off as well. So no real certainty, but this is, I'm assuming, largely positioning related at this stage. And positioning has been very, very one-sided. So more on this in just a bit. But let me just quickly also run you through what else is coming up as far as the show is concerned. And we will, of course, talk about stocks, lots of names there. And, you'll have that's the market basically. But Fino Payments Bank, Payment Bank is down sharply. IDBI Bank, the last I checked, was down 15-16%. But you also have, a bunch of other names, oil marketing companies and L&T, and some of these names, of course, we've discussed from the morning, which we will revisit in just a bit from now. So this is a This was lined up. This is what you will see here in the last 60 minutes, over the next 60 minutes here on trade. Mitesh is with us with what he'd likely to do in terms of trades. Mitesh, just a quick comment on this sharp surge in the last 10 minutes, and what would you do?
Good afternoon, Krishna. In fact, today morning I was advocating chances of pullback are much stronger, much higher than ever before because of two reasons. One, I think the Nifty, I highlighted that there was a gap between 22,920 to about 23,300, and we got a low of around 22,955. So we were in that gap area, extremely oversold in the hourly to hourly chart. Same for the Bank Nifty. If you look at the historical chart, I think we had 4 or 5 bottoms lows being made around 53,600 on the Bank Nifty on the 2nd, 3rd, 4th of September. Then before that on the 12th of May, and before that 5 intraday highs were made at 56,500 on the 9th of December 2025. So very clearly it was again an important support zone for the Bank Nifty as well, multiple pivots there, and similar to Nifty, it was an extreme case of oversold readings on the hourly, 2 hourly, 3 hourly charts, etc. So I think this clearly suggests that the pullback is on its way. I still believe it will be a pullback, and on the Nifty, if I was to look at targets, the first level is close to about 23,550. Then 23,800, and in a very good case scenario, maybe even 24,200, 300. But that should be it. So that still is about 900 points higher than here. But yeah, let's not forget we have fallen 3,200 points straight, and then therefore a 900,000 point kind of pullback will still be only a 1/3 of a pullback. Having said that, the calls that I have right now, 2 buy calls. The first one is a buy on Indian hotels with a stop at 599 for targets of 630. And BSE, Bombay Stock Exchange, is a buy with a stop at 28.24 for targets of 29.10.
Okay, all right. Just one quick word, Mitesh. You said that the first level of resistance will be 23,550?
Right.
All right. And, the recent, the Friday's high, I think, was around 23,450 odd. So we'll see whether or not by the end of today we can get closer to that mark. On the Nifty Bank, the level that you were looking at, because that had a sharper pullback, right? That was down 7% just in the past week.
I think I'm not looking at Friday's high, but what I'm looking at actually is the gap between Thursday and Friday.
Okay.
There was a falling gap. So 23,550 is the level on the Nifty. On the Bank Nifty, that level is close to about 54,800, 738, 750. And then the next level on the Bank Nifty, which is closer to our 10-day average, is about 56,200. So these are the 2 levels on the Bank Nifty.
Got it. Okay. All right. Thanks a lot, Mitesh. We'll keep coming back to you during the course of this show itself. For the time being, it's good to see green. I'm happy at least I got the green jacket on this sort of a day, because a lot of selling is what we have seen. But I think the biggest positive today is not only the headline index pulling back, the mid-cap index that was struggling, that's on its way to move into the green. And the number of stocks that were advancing had fallen to around 500 stocks. That's on its way to around 1,000 stocks. So I think the crisscross lines as well, some bit of pullback, trying to come a little bit closer to each other. That's what will make portfolios feel good, at least for now. For the time being, we'll refer to this bounce as a bounce from oversold levels. Let's talk about a couple of sectors, though. Oil marketing companies, they're under pressure following the bearish HSBC note. Let's go across to Sudarshan for details on that particular note. Sir?
So over the last few weeks, OMCs, or say oil marketing companies, have seen a sharp fall. And all these 3 names, IOC, BPCL and HPCL, had hit record highs, or say 52-week highs in the last few months. So IOC hit 52-week high on Feb 27, BPCL on Feb 5 and HPCL on Jan 5. And from the time, since the time this war had started on Feb 27, if you take a look from that day, these 3 names are down somewhere in the range of 21 to 22%. What are the reasons? First, crude has seen a sharp spike. So in February, Brent was hovering in the range of $65 to 70 per barrel. Now it's about $106. It's at a 4-year high. Second reason, over the weekend, Election Commission has announced poll dates for 5 states. Now Model Code of Conduct comes into effect. Now there is no question, there won't be any hike in the fuel prices if there was any expectation. So these two news have impacted. And another thing has come today is HSBC downgrading all the 3 names to hold IOC IOC, BPCL and HPCL and has cut target price. It believes that even if there is a fall in crude and comes back to the level of $75, these three names will still have losses on the marketing front. So as far as the target price is concerned, for IOC, target price is cut to 150 from rupees 200. For HPCL, target price is cut to 360 from 620. And for BPCL, target price is cut to 340 from the earlier target price of 470.
Got it. Okay, all right. Thanks a lot for that, Sudarshan. Well, we have Deepan Mehta, Director, Alexa Equities, who joins us on the show. Hi, Deepan. How are you feeling about the markets? And if you want to comment anything on these OMC companies, you've got a bit of a grin on your face, so that's good. After the kind of selling that we've seen, a relief rally was due. A relief rally is what we have got, at least as of now. Go ahead, Deepan.
Yeah, that's right, Najib. Good afternoon, and thank you for having me on your show. Yes, I think we will have such bounces from time to time, but question in my mind is that are these the V-shaped recovery we're looking out for, or is that the bounce which is going to get sold into and it creates a space for the markets to go down further? That any time will tell. Very difficult to say. We have seen such uncertain times in the past, and I can tell you it's impossible to predict. Specifically on oil marketing company, I think what is a bit rattling the investors is that the way the government is right now also controlling the prices. Ideally, if it was a free pricing mechanism, then the oil marketing company would naturally have to increase their prices, but they are not. They're holding it, which means that on the marketing margins, they may be going negative, or at least they may be giving some huge compression on the marketing margins over there. So, where is the kind of independence which these oil marketing companies have? And that's been the bane for so many years, that there is a certain amount of tacit pressure from the government from time to time. And then there are the elections also, during which time they are not allowed free pricing. So that does affect the kind of, value, I would say, discovery as far as oil marketing companies are concerned. But look, once we're in blue sky scenario, nobody thinks about these things. Once oil prices are down, you will see that there's a great rally in oil marketing companies as well. So if you want to bet one stock, one sector, which will do extremely well when oil prices go down, it has to be the oil marketing companies. It's a no-brainer. Valuations are low, dividend yield is great, and they have done a lot of expansion plans, the benefits of which are still to be realized.
Okay. Yeah, I mean, you're never in love with oil marketing companies, Deepan, from what I remember. So point taken. Just a quick word on, take something like a Mahindra and Mahindra, or let's just forget Mahindra and Mahindra. Let's talk about companies which are going to be lesser impacted because of everything which is happening. Everything gets impacted in some way or the other, at some level, right? Some lesser than others. What would those be? I mean, what are what kind of, because everything is corrected, but you got to find things where, valuations have come off quite sharply, become more reasonable. And also, even if this goes on for a while, underlying businesses will remain relatively unaffected, Deepan. What would those be?
No, Prashant, we cannot take that simplistic view. Because if you go back into history, what really happens is that high oil prices have a direct impact on our economy. And that boils down to corporate earnings as well. Because if the oil prices go up, inflation goes up, therefore interest rates go up. And to that extent, it affects the GDP growth rates. That in turn affects the corporate earnings as well. So whenever oil prices have crossed the $100 mark, you go back into the Gulf War and to the recent situation also when Russia attacked Ukraine, it does have that 1 to 2% hit on the GDP. It's historically been proven. And that can happen over here as well. We are growing at 7.5%. Who knows, if this extends for a long time, we grow at 6.5%. And a 1% drop in GDP has an even more dramatic effect on the earnings. So it's not something which is that.
No, so allow me to explain. Press that point. Yeah, you're absolutely right. I mean, but the point is, then you're analyzing this $100 for the next 1 year. I mean, which we don't know. You can't say it'll stay at 100, or I can't say it won't stay at 100. Right? No one knows. That's the point. But take Mahindra. I started with that example, right? Mahindra on a trailing basis now, that is M&M, if you look at consolidated numbers, is trading on a trailing basis, now trading at 20 times earnings, Deepan, right? I just looked at something like completely different business. Gokuldas Exports was 900 rupees sometime back. It's under 600 now. Again, I just looked at numbers. FY25 was bombed out. They'll probably do 100 crores in profits. That is Gokuldas. Next year, numbers should be north of 200 crores because of tariffs, etc. now settling down. That one is trading at about 20 times earnings, but not trailing on a FY27 basis. So, I mean, the point is you can't say oil will be 100 1 year from now. We don't know if it will be or not be. So, it's like trying to time the absolute bottom or the top, which is impossible. So, wouldn't it make sense to look at these kind of businesses?
No, Prashant, you're right. And M&M, Gokuldas are not just two companies. If you go across many sectors, many companies are available at very, very attractive valuations or at reasonable valuations. But there's also the sentiment, and there's also the fact that although the earnings may not compress as much, like say if you expect M&M to grow at 17%, it'll grow at 15%. But the P ratio is where the hit is. And that's usually what happens. In the bear market, the Ps get hit. In the bull market, the Ps expand. The earnings trajectory remains more or less in that, hardly 2 to 3% band that it changes. And also there's a big issue about the liquidity in the market, the fact that so much of FI selling pressure is coming through, and they're the price makers. The FIs are the price makers. I know that every dollar they sell is matched by rupees being bought by the domestic mutual funds, insurance companies, but they are the price makers, and the velocity which they sell across the board, that impacts the prices. So there are many other things. It's not just fundamentals. If just by analyzing the fundamentals, the market was going to work for you, then you know what it has not done in the past. Also, the technicals have got completely disrupted, and they have completely, I think, broken down, if you ask me. I mean, I don't know why the technical has not talked about this death cross, where the 50-day moving average goes to the 200 moving average. I don't track fundamentals technicals so much, but there are a lot of other kind of complications or a lot of other issues, and it's not just that you can focus on the only the fundamentals and the earnings per share and what P multiple it is trading at.
Mm-hmm. Okay, got it, Deepan. By the way, we saw a bit of a bounce, and we are approaching that 23,450 odd mark. We hit that, and we immediately got rejected. We went down 30-40 points, but that dip got bought into very quickly. So from around 23,400, we're back moving towards that resistance mark. I think this 23,450 to around 23,500 will be a bit of a resistance zone. It coincides with Friday's high as well as today's high. So that range is going to be important. Let's talk about IDBI Bank, though. That's reeling under pressure. This after sources suggest that the lender's long-awaited divestment plan has been scrapped. Gaurav joins us to break it down for us. Gaurav?
Well, yes. IDBI Bank is in focus, and the reason being that if you look at the bids, as per sources, the bids that they received for the divestments were lower than the reserve price, and that's the reason why the divestment plan is assumed to be scrapped in this year itself. Now, if you look at IDBI Bank, there were two prominent investors who were looking into it. First is Emirates NBD, and second is Fairfax. If you look at Emirates NBD, they have already signed a contract, and they will be having around 60% stake in RBL Bank. On the other hand, if you look at Fairfax, they already own CSB Bank. Over 40% ownership is what they have in the bank itself. If you look at IDBI Bank as well, Government of India along with LIC, they hold more than 90%, and they were gonna sell around 60% stake in the company, from which government was going to gain around 30,000 crores, more than 30,000 crores as per reports. But now, given that the bids were lower than the reserve price, it seems that the deal is not going to happen. Why this is actually hurting the market is that this deal was actually a long-awaited deal since FY21. We are seeing some updates coming up on the divestment of IDBI Bank, and when it comes to divestment, IDBI Bank has always been at the forefront. But given that there are some concerns and it might not happen, we are seeing a sharp fall in the stock price.
Thanks a lot for that, Gaurav. In fact, we caught up with the MD and CEO of LIC on the sidelines of the India Business Leader Awards on what he makes of the development in IDBI divestment process. Let's hear into what he had to say.
No, they are not linked. Actually, this is, I don't want to be responding to such speculative kind of points. The Deepan has been taking a call on what is going to be their priority, which divestment is going to go immediately and which is going to follow what.
Correct.
So it has been their considered move, and I'm not very clear. I don't know why there are rumors about the reserve price and other stuff like that. It's not yet very clear.
Okay, all right. And it's the dichotomy is unfolding in the PSU banks as well. A set of investors believe there's outperformance on the anvil, while there's a group that cites the ROA trigger that could even cap price up more. Let's understand this, Gaurav. Tell us more about this data point.
Well, yes, if you look at PSU index in the last 1 month, we are seeing PSU index is down almost 9%. In fact, in this month itself, it is one of the biggest losers with 15% losses that we have seen in an index itself. And we've got companies like SBI, Bank of Baroda, who are actually down almost by 10 to 13%. Even in the likes of Punjab National Bank, we are seeing a 10% fall in this month itself. But for the last 1 year, if you look at this pack, it has clearly outperformed the market with around 45% gains, with banks like SBI, PNB gaining more than 20%, and the bank like Canara Bank gaining more than 60%. Now, what's the argument going on in the PSU bank sector? One set of investors, they believe that there are actually technological changes which are happening in PSU bank, which leaves little gap between PSUs versus private sector banks in terms of technology. Second is that they also believe that PSU banks are gaining market share, which is actually true in terms of loan book, specifically in the vehicle book and the retail book. These banks are gaining share, and that's the reason why we are also seeing some profitability increasing. But at the same time, there is another set which is concerned about the valuation. So if you look at PSU bank's index valuation right now, it trades nearly at around 1.2 times price to book, quite higher than its 5-year average of 0.9 times. And even if you look at some prominent banks like SBI, PNB, Bank of Baroda, all of these banks are currently trading above their 5-year average. Specifically, if you look at Canara Bank, it is trading at 1 time price to book, and SBI Bank trading at 1.6 time price to book. But remember, now the concerns, or rather the talk points are, is this valuation gap actually valid? Recently, in the morning, we had a conversation with Mr. Suresh Ganpati from Macquarie, who believed that the valuation gap is nearly zero now. And he also believes that the PSU banks, now they do not have enough triggers for ROA expansion that we have seen in the last few quarters. And that is something which is concerning. And that's the reason why they are in favor of the private sector banks, given that the valuation of private sector banks are also lower. In fact, in his view, HDFC Bank, ICICI Bank, all of these banks are trading in the range of 1.3 to 1.5 times price to book, which is actually a cheaper valuation. So all in all, in the last 1 year, we have seen PSU banks actually outperforming. But now, given that it has already declined almost by 10%, it will be really interesting to see how the story pans out for PSU banks and if there is any gist left or any gains left in the PSU banks in coming days.
Okay, all right. Got that. Thanks a lot for that, Gaurav. Deepan, you heard what Gaurav has to say. IDBI Bank, the reason that it was afloat was because there was reportedly a lot of interest and there was hope that the divestment will see the light of day. That's not happened. The stock has pulled back drastically. Your view on the stock and what else do you like from the PSU banking space?
No, Nigel, I think, when I heard this news about IDBI privatization being called off because the bids were lower, the first thought that came to my mind is that is the Indian banking sector now less attractive than it was before? And I've always said that although short term they may do well because of lower interest rates, improved economic activity, medium to long term in the banking sector is a red ocean. And maintaining these kind of net interest margins, I'm not so certain. At some point of time, I think they're going to face a lot of competition from the debt market mutual funds in terms of raising low-cost deposits, and big projects, I think, will go directly to the debt market or through debentures. So it's going to be extremely challenging times if you ask me for the banking sector. There was a time when the private sector banks had a great run because PSU banks are out of the market, but now they also have come back rejuvenated with much better balance sheet quality. So the entire industry, I think, slowly you will see the profitability slow down, as we have seen in HDFC Bank, Axis Bank, IndusInd Bank as well. So I would be a bit circumspect on the banking industry, although a trading rally can happen any point of time because of, it's a cyclical business. So I would just like to be a bit cautious there. The better way to play would be through the NBFCs. This is a great time to buy stocks like, say, Bajaj Finance or a Cholamandalam or even a Shriram Finance. Having said that, we got investments in all of these three NBFCs and even L&T Finance for that matter. So I would think that the better way to play the lending industry through the NBFCs rather than through the banks.
Okay, all right. Thanks a lot for that. But we're not yet done with these banking names. Fino Payments Bank, that continues to remain under pressure. Gaurav, what's the latest on that front?
Well, yes, there was a news report which suggested that the DGGI may soon recommend ED probe into online gaming transaction connected to Fino Payments Bank, and that is something which is hurting the stock. Even if you look at the stock performance, today it saw a decline of more than 15%. But what is actually happening? The bank has clarified. What they have said is that the bank is currently not subject to any investigation than DGGI Hyderabad in related to the matter. Other than that, they have also clarified that the ongoing investigation of DGGI pertains to certain program managers, and it is not about the GST compliance of the bank itself. Third point which they have mentioned is that they do not directly or indirectly engage or promote any gaming or gambling activities. But all in all, why it is actually becoming a concern for investors despite bank's clarification is that if we go back in time, now in December 2025, bank has received in principle approval for transition from the current status to small finance bank. Now it is actually first of its kind if we compare it with the space that the bank currently trades at, and at the same time there are some concerns which suggest that there may be some delay in the conversion from the current status as financial institute to small finance bank, and that is something which is concerning the investors, and that's the reason why if you look at the stock price, it is currently under pressure.
Okay, all right, Gaurav, thanks very much for that. Deepan, any thoughts on this one?
No, Prashant, many times I thought of investing into Fino Payment Bank because very impressed with their business model. I think they are going very deep into the rural areas and working with the unbanked customer, and they act like a correspondent bank for many other banks as well. And the technology platform also is very strong, whereby each of the regions can actually act like a branch. If you look at their presentation, it is very impressive. The story is really compelling. But when you look at the track record, it has always been disappointing. So somewhere something is not going right. I'm not sure what it is. I'm not going to put my finger on it. But it was a bank with a different type of a business model and a tech platform, but it has not delivered as yet. And with these kind of uncertainties around top management and now maybe whatever truth is there about this, we can't say. But end of the day, the performance never came through. So therefore, I never invested in the company. And that's one company to watch. I think if there's a turnaround, it enters into a new growth phase. No doubt the stock price will be up by 30-40% after that. But once these uncertainties are behind and you understand exactly how it's going to grow at faster than its peer group, that's the time to look at this company in positive light. For the time being, I think it's just best avoidable. Again, unfortunately, the time to sell is gone. So you just remain invested if you're a shareholder of the company.
Okay, all right. Got that, Deepan. Thanks a lot for joining in and giving us your take on the markets. And today, I think, Deepan, you could take part of the credit as well. From the time we started chatting, the market started getting its act together. So let's chat more often on a lighter note. Let's hope things recover from here on. Have a pleasant evening. Okay, all right. Time to swim into a short break. On the other side, we have Ronak Onkar of PPFAS Mutual Fund, who's waiting for us. Stay tuned.
Okay, 265 points, and we're at what, 23,400, and it's a sharp spike which is materialized, and it's all happening in the last 40 odd minutes of trade. Started at about 220, and we've picked up, I think, about 350 points actually since then from that level at about 218 or so. 23,400 plus is where the Nifty is. And as I said, tomorrow, of course, is also Nifty expiry, to stay short, to light, news flow very, very volatile. So perhaps ahead of that, some amount of covering maybe into tomorrow as well. We'll see. Ronak Honkar is with us, Head Research and Fund Manager at PPFAS Mutual Fund. Ronak, great to have you with us here on the program. Thanks for joining us. Levels are better, but are they better, are they very good levels to sort of go in and buy? I was having this conversation with the earlier guest Deepan on names like Mahindra, where valuations have dropped off to about 20 times trailing earnings. And he was making the point that no one knows how long this goes on and whether this, what is so far a terms of trade shock, becomes a growth hit if oil prices stay this high for an extended period of time. How would you account for that, Ronak?
Thank you for inviting me. So I agree with what you just mentioned. The shock, which seems like a short-term shock, has not really decimated valuations across the board. Some of the stocks which have fallen, they are merely corrected from their peak valuations, but they were also stretched to begin with. We already own companies like Mahindra. We are part of the portfolio in the FlexiCap and the tax saver scheme. So we are benefited from whatever growth they will have. But I agree, in the past, whenever we have seen oil prices shooting up, there has been a inflationary trend, and that might affect growth, but it's very uncertain to put a timeline to it, put a number to it. It's better we look at company by company, sector by sector, how the performance pans out from now onwards.
All right. Hi, Ronak. Good afternoon and good to see you, and congratulations to you and the team. Sitting on cash for a while. I've been pushing you for the last many interviews. Have you all deployed? You're saying no, it's gone up by 1% or so. Give us the updated number. What is the cash as a percentage of the money you're managing right now that you're sitting on? And tell us, last few days, have you deployed some money or you're still sitting on that cash?
Well, we still have about 20% cash. And although we discuss percentages on an absolute basis, the cash number has been deployed over a period of time. If you see, I think a better trend to look at is the last 1 year. When started by somewhere close to 25% cash allocation, it's now about 20% cash in the FlexiCap fund and even lower cash in the tax saver fund. So we have been deploying, but only in areas where we find valuations to be attractive. Some of those companies we already own, but a few new names we've added which are in the mid and small cap category, but not meaningfully. So we have not added significantly to the positions that we have had. Also looking at the sectoral caps that we want to maintain in the portfolio. But yeah, there has been a little bit of buying, also some selling, but at the same time, cash is at 20% now.
Okay, at least 20% is better than 25%. A lot of market watchers, they say, ask Ronak, when is it going down to mid-teens? Then we get a little bit more optimistic if they are deploying. For the time being, at least on a 1 year basis, it's come down a little bit, though you're sitting on a good amount of cash. And talking about stocks that you all have added, I'm just looking at the recent edition. If I compare it with the previous one, it appears in some of the tech names you'll have added positions. Infosys, HCL Tech, just to name a few, and TCS as well. Are you all getting a little bit more optimistic on tech? And do you think that the price damage, much of it is in the price now?
It remains to be seen where the prices will be. But if you look at the IT services play over a period of time, the basics are known to everyone. The governance quality of these companies is good. The cash flow profile has been good. The only challenge people are looking at is whether the business model itself will change with the implementation of AI tools coming in. So how will the pricing work? How will the margins work? How will the hiring work in this industry? In my view, so far, if you look at IT services, whenever new technology has come in, a lot more work has happened. If prices fall down of the services that they provide, more volume of work has been created. So it remains to be seen in the next 5 years how this business will turn. But mostly from the basics of this business, they are adaptable. They have cash flow to go behind acquisitions. They have cash flows to experiment. I think some of these are good characteristics to have. And valuations have been lower even better if we can buy more.
Okay, all right. Sounding a little bit more optimistic on the tech services. Ronak, request you to stay with us for the time being. Let's turn the spotlight onto stocks near the 52-week low. Hormus, run us through that list.
You know, there were a lot of names across the market today before that recovery happened that had hit a 52-week low in today's trading session. So we'll start off with the index first up. There were 5 big names that were at 52-week lows in today's session. HDFC Life, ICICI Bank, Infosys, Trent, TCS, and made intraday lows. The interesting bit is that even today's lows are well below their lowest price target on the street, be it for HDFC Life, be it for ICICI Bank, be it Infosys, TCS, or even Trent. TCS is slightly higher than its lowest target, but Trent, all of the others are significantly below their lowest price target on the street. Same is the case for a lot of the mid-cap names. In fact, it's just 5 names that we are highlighting here. A lot of other mid-cap index names that were at 52-week lows earlier in the day. With Concor, Colgate has taken a bit of a thrashing in the recent times. Exide Industries, KPIT Tech, SBI Cards, all of them now, most of these still again below their lowest price targets on the street. And the story is no different for the small cap index as well. Now you look at names like Aditya Birla Real Estate. This stock is down almost 60% from its 52-week highs. We'll get to that in just a bit, but take a look at Amara Raja, MGL, Inox Wind. They are either well below or near their lowest price targets as well on the street, so the Mahanagar Gas being a case in point. But what next for all of these names? Is the street continuing to remain optimistic on these? Look at the Nifty names. HDFC Life and ICICI Bank have no sell recommendations on them despite the fall that they have seen. Infosys and TCS, after the pummeling they took in February, still down for the year. Still, majority of the analysts still have a buy recommendation. Upside potentials ranging from anywhere between 35% to as high as 50%. There are a couple of broader market names that stand out. One of these is Aditya Birla Real Estate. Why is that so? It is a consensus buy among all the 9 analysts that have coverage on it. The stock is down almost 60% from its June 2025 peak, and the consensus estimates of price targets is implying an upside potential of almost 90% from current levels. Now, the other broader market name that remains a consensus buy is Inox Wind, and that one too, all 7 analysts who have coverage on the stock, they have a buy rating. That stock too is down 55% from its June 2025 peak, and the implied upside potential from current levels comes up to as high as 80%. And the last name on this list is KPIT Tech, and that is one of the biggest underperforming names in the IT space currently. The 23 analysts have coverage on the stock. May not be a consensus buy, but almost 2/3 of these still have a buy rating on the stock. It's down almost 60% from its peak, and based on the consensus estimates of price targets, the implied upside potential comes up to around 84%. Though the stocks may have taken a pummeling, but the street continues to remain optimistic. There is still some hope for a lot of these names at 52-week lows today.
Okay, all right. Thanks a lot for that, Harmas. And Mangalam as well joins me in the studio. Mangalam.
Nigel, near 500-point recovery on the Nifty from the lows. Let's see where that goes. It's the green coat, maybe. Let's see how that goes. And, we monitor how it progresses from here as well. We have Ronak is still with us. Ronak, I'm looking at the nature of stocks which are moving right now today. Obviously, the Nifty Bank has led the rally, but we've seen a lot of traction in a lot of these consumption stocks as well. Now, most on the street believe that for staples, it is a long and extremely grinding and sorry sort of path from here on when it looks to growth and, valuation multiples as well. Some calling it structural derating as well. But amidst all of this, the stock that has done actually well for you guys lately has been Zydus Wellness, because the company's gotten into newer forms of consumption, be it the protein play, be it the sugar-free play, post-semaglutide, the kind of nutrition that would be required, well placed for that. And recently they made an acquisition to go overseas as well. All these factors, do they make you a lot more, comfortable at these valuations now that it's off 20% from its highs? Are you adding more?
So in Zydus Wellness, this is our second innings. In the first innings, we saw that the growth was moderating with the portfolio not doing so well. So we waited and studied it for a few years. And this is the time we got a chance to re-enter after some of the changes that they have done. But it remains to be seen how the business grows. So we will wait and watch. It's not necessary that just because we bought something, the business starts performing in a fundamental way better than what it was. We have to monitor the growth, we have to monitor the distribution. Even the new areas they have entered are very competitive areas. So we will wait and watch and see how it performs.
Okay. All right. Quick word in terms of the frontline names, Ronak. Coal India is something that you'll have added on to. The growth hasn't been there and pricing, strength hasn't been there. However, Now, with the disruption in gas, the street believes that the pricing will come back and demand will come back in a big way. Do you all continue to add on to this position? Because I was looking at least in the past month, there was a good amount of addition.
So on the margins, if you see the additions is because the covered call options that we write. So we might marginally add whatever gets sold off when the options are sold. But in a Coal India kind of stock, I think longer term, we have to just zoom out a bit and see the energy mix that we have. It's still quite coal dependent, although terminal value growth of that business cannot be ascertained. But at the same time, we have to see that coal is an important resource for our energy security. And it has been an important source for a long period of time. And despite the fact that there are newer forms of hybrid technology coming in, we still depend a lot on coal. And even if you look at the electrification that is happening across the country, the dependence on the base load of coal has not gone down that dramatically. So we'll see how this business performs. Although productivity-wise, it's one of the most profitable coal mines operated in the world. Also, the size at which they operate, the cash flows they generate, it gives a dividend yield cushion for us as investors also. So not necessarily a very growth-oriented business, but at the same time, a stable cash-generating business.
Would you say the same of ITC? I mean, just trying to understand, because the regulatory overhang has actually made the business, disrupted the business quite a bit over the last couple of months or so.
So the regulatory overhang on ITC has been there for more than 3 decades now. So we cannot ignore that. In fact, the company has not ignored it. They have made investments actively to diversify from the tobacco portfolio. And that is yielding results. Although the tobacco piece also has kept growing. So you don't see a meaningful change in the profitability mix of the business. But if you see the revenue mix of the business has definitely changed. In fact, capital allocation has improved when they demerged some of the capital guzzling businesses from the ITC fold. And we'll see. So the business profitability has not dramatically changed. The quality of growth itself we'll have to see on the consumer side as well as the tobacco portfolio. But still, again, the same piece, cash generating business, great dividend yield comfort. At the same time, they have good distribution reach as well. So everything that a consumer business needs.
Take that point, Ronak. Always a pleasure speaking with you. Thank you so much for joining in. Nigel, the F&O space, short covering underway?
Well, I will attribute a few factors actually to today's pullback. The pullback, actually, the correction was very, very sharp. So relief rally was due. So that's exactly what you got. The RSI level we had pointed out earlier as well, that had moved into the oversold territory. But earlier today, when Mangalam and myself were on Chartbusters, we had made this point. The Nifty was down close to 200 points and the India VIX as well cooled off. Normally, that signals one kind of factor that there could probably be a reversal. Currently, it's cooled off close to 5%, but even at the day's low, the India VIX wasn't going up. And if I look at it in the last few trading sessions as well, imagine a day when the Nifty is down 500 points and the VIX moves up only around 5%. That's what happened even on Friday. So the India VIX is not going up the way it was going, in the previous few trading sessions. Case in point being on last Monday, I think it shot up more than 15-20%. So cooling off of VIX, that's one factor that you should be tracking. The PCR, it had moved to the lower end of the range of around 0.7. That's currently at around 1. Because now there is some sign of put writing. Remember, this market is still brittle, but the put writers are putting in a bit of a fight. 23,200 put, the premium is down to around 84 bucks, I think from around 270 rupees, around 80 rupees approximately. 23,100 put as well, the premium is down to around 60 rupees, 60 to around 59 rupees or thereabouts, from around 222 rupees. So there is writing we're seeing on both those two strikes. While on the upside, there appears still there is writing at around the 23,500 call. The premium over there is ballpark close to around 100 rupees. The market is up, but still you're not making money on that particular strike. The premium is holding at around that 100 rupees or thereabouts. So that 23,600 mark, that's the next line in the sand. Well, for today's trading session, you will want to end closer to Friday's high, which was at around 23,492. But I think Liberation Day low, which was in early April, you don't want that level to break, 21,700 to around 22,000 odd mark. Important mark on the downside, not just for today, not for the next few trading sessions. You do want that mark to breach, because the last time around we visited that mark, you saw a very, very good rebound out there. Individual stocks, BSE has come in for about a short covering. Good uptake on the stock. Open interest down. On Bandhan Bank, there is aggressive shorts actually that have got into the system out there. And there are some mild signs that some of the shorts are covering. So I'll keep an eye out on that one, because from the lows, actually, it's seen a decent amount of a recovery. When Bajaj Finance, a stock we spoke to here in Ved earlier today, that one's seeing a good amount of fresh buying. Remember, this is a stock that's corrected more than 15% from the recent peak. So a relief rally was due. A relief rally is what we have got. Hopefully, this can extend a little bit on the upside. For the time being, take a short break, come back. We'll continue our chat on markets. We'll also tell you what the dealing rooms are saying.
Welcome back. The market continues to do well. The frontline indices continue to recover extremely well, though the IT index as well as the pharmaceutical space are seeing some bit of profit taking. IT has been under pressure for a bit and continues to be so. And it's the mid-cap index, actually, which is slightly under pressure in today's trading session as well. Not full confidence returning, perhaps 2,000 stocks which are still declining versus 1,000 stocks which are advancing. The gap has been narrowed from the start of the day and more so in the last couple of hours. But nevertheless, there is still a gap. What are the D Street doyens speaking about? In our special segment, D Street Chatter, Nimesh gets us an insight. Nimesh, there is a strong recovery, but is it a recovery of confidence or is it still a pullback from oversold zones?
Well, Mangalam, it looks like it's a pullback from extremely oversold levels. And today's recovery is largely led by the large cap names. And, we highlighted in the morning as well, a lot of the stocks like L&T, Interglobe, all but fallen to almost bare levels or, bare target prices for most of the brokerages. So, M&M, all these large cap names were sharply down in the last couple of weeks. And hence, you're seeing a bit of a recovery, and that's helping the Nifty as well to recover from the extremely oversold levels. From a flow perspective, still, I believe that the FIs are net sellers. And today's selling seems to be largely in the PSU bank stocks as well as in the OMC names. So these two sectors are standing out as far as aggressive selling from the larger FIs. Even the bank Nifty has recovered from the intraday lows, but again, that took extremely oversold in the last many days, and hence looks at stocks like HDFC Bank, ICICI Bank are all recovering in today's market. The only notable gainer there in the private bank names is Bandhan Bank today. So that's one an outlier. But in general, you've seen a bit of recovery in the broader market, in the banking names as well. Technically now, which was seen to be a big support, 23,800, that will act as a big resistance on the upside. So watch the level on that level to watch out for on the upside. But frankly, today's pullback seems to be largely led by large caps and a bit of short covering from an extremely oversold levels.
All right. And individual stocks, Nimesh, what's the insight that you picked on that?
Well, so as I mentioned, the two sectors that stands out in terms of aggressive selling is OMCs and PSU banks. And within that, Canara Bank and IOC stands out. Both these names are expected to see very high delivery volumes, but on the sell side. So aggressive selling is my sense in both those names by the larger FIs in today's market. So that's the first couple of stocks. The second name is Eternal. A couple of reasons why the stock is pulled back in today's market. One, the selling pressure from a leading domestic mutual fund seems to be largely over. And there is very small buying, but there is buying nevertheless in today's market in Eternal. And the other name which stands out in terms of buying is MRPL. Big move on that name. But my sense is that backed by very large FI buying in today's market. So watch out for delivery volumes, expected to be very high in MRPL as well. The third is Kotak Mahindra Bank. I've been reporting for the last many weeks now that there is aggressive selling in Kotak Mahindra Bank. Looks like that selling from a leading FI is largely over. There are some indication of small buying from larger institutions into Kotak Mahindra Bank at current levels, but largely looks like the selling is largely over from the leading FI. And the last one is BSC Limited. Even that's buzzing in trade today on back of buy flows. Some bit of buying has resumed, and leading domestic mutual fund is an active buyer as well in BSC at current levels.
Right, Nimesh, take that point. Thanks a lot for that. You spoke about Eternal. The other platform company is Urban Company, which too has seen a big recovery. In fact, all of last week, it was the only one which was in the green. Before that, it has fallen to its pre-IPO price or below the issue price as well. The issue price was 103 rupees. The low on the stock was about 100 rupees hit on 4th March. And from those levels, the Urban Company stock has seen a decentish rally, sort of 10-12% coming by in just the last few trading sessions. The market was under pressure. Good time to welcome Mitesh on the show once again. Mitesh, the tomorrow trade, what would it be?
So I think for carrying longs may not be a bad idea right now. I believe that the bounce back will extend because we still have some space. So NTPC is a BTST with a stop at the 378 for targets of 385. And the other one is State Bank of India. It's at a gap support area. It's bounced back from there. So BTST with a stop at 1056 for targets of 1080, 85. Yeah.
All right. So those are a couple of buy calls. Carry it today as a long position for unwinding tomorrow. Also, good time to welcome Amrish Balika on the show. Amrish, what's your idea after the market has corrected so much? Individual stocks down 30-40% from the peak, and most of them capitulating in all of last week. Is there any contra long that you have? Is there any opportunity?
Yeah, Mangalam. In fact, there's one opportunity which I've identified. It's a VA Tech Wabag. In fact, they provide the complete range of water and water treatment solutions, and they have around 90 patents. Desalination is a huge opportunity, and that's the focus area also during this Iran war. And in fact, we may see many more decentralized projects being awarded post the war. In fact, to lower the risk of the centralized desalination plants which are there in the Middle East. They have a strong execution track record, more than 2,300 projects in the last 3 decades. Order book position is excellent at about 15,000 crores, which is 4.5x FY25 revenue. And nearly 1/3 of this book is those high margin engineering and procurement orders. They also follow an asset-light model, and O&M annuity business also has been steadily growing. So we have seen the Q3 earnings were decent. Revenue was up about 18.5%. Gross margins improved by 225 basis points to about 25%. And even as far as India is concerned, government focuses on clean water segment. And the ESG regulations are also tightening. So demand for water-related projects will move up, even domestically. So FY28, I'm expecting an EPS of 90. So the target price is 1620.
A lot of these new age companies are now finding buyers. So we spoke about Eternal and Urban Company. The one that is adding to that list right now is 197, Paytm basically. Paytm has seen a biggish sort of up move from the lows as well. And this, I don't know whether it's coinciding with PhonePe deciding to, delay their issue plans right now, given the sort of market circumstance that we are in right now. The big concern for them was, the subsidy that would come on these POS machines, which accounted for a fair amount of their earnings cushion. Amrish, do you have thoughts on Paytm?
I think, that will surely, have an effect going ahead. But, right now, I think it's because of that delay of PhonePe IPO, because of which this stock is moving up. I think it could be temporary. I think the upside could be about, 1,080, 1,100 levels. I think going beyond that could be a bit difficult.
Another one which is surging is ITI, up 18%. Big volumes, has been up all through the day, and now with the market up move, it's extended its gain. ITI obviously has seen a cut over the last many months. Now, if you look at it, it's up 18%. Do you have a view on this one?
No, in fact, ITI I don't track, so difficult to give a view.
Okay, all right. Hi, Amrish. Good to see you in. Any view on Ola? Came at very premium valuations, went up, then came down, saw a bounce back. It came down to around 22 rupees. Now it's seeing a bit of a bounce. At around 23 rupees, would you be a buyer, or you're saying there's too much of, hodgepodge that's gone around? Or you rather not, participate?
No, it depends, on what sort of investor you are. If you're a safe investor, even at 30 rupees or even at the current levels of 22, 23 rupees, I wouldn't say you should invest. But then if you're a risk taker, yes, because in case we see a decent move from here, it can actually double. Because see, it's been a major fall from grace. When the IPO came, post that, we saw levels of even 170. From those 70 levels, we saw 170, which was high expectations from the management. From there, we have moved to a trust deficit. So, end of the day, you are actually investing in a management. And when you know that the statements of the management don't really carry weight, every time they make an announcement, nothing really happens. So, for a safe investor, trying to stay out. But if you are a risk taker, yes, I think you can take that risk. Because I think one product which they are again talking about, I don't know whether it will finally come or not, is the inverter. I think that could be a game changer. If whatever they've announced is true, it can be a game changer. And the gigafactory which is there, which is at least a good supply chain for the Ola scooters, I think that's also a big positive. But like I said, question mark is how much weightage do you give to whatever the management says?
That's the if. That's the big if that you've spoken about here. And if you're a risky or risk-seeking trader, then maybe go ahead and buy Ola Electric. Finally, before we let you go, we have about a minute to close. Amrish, cement space. Ultratech, the top Nifty gainer right now. Following suit is Grasim. We've seen a fair amount of price damage on these counters already. Do you want to back any stock in the cement space? Do you have a top pick here?
Yeah, again, if you're talking of longer term, you need to have cement in your portfolio. End of the day, infra growth in India is going to continue. We've seen that pace increasing in the last couple of years. I think that's going to continue. So one of the picks which I'll surely have in this space is Ambuja as well as Ultratech.
Got it. Okay, all right, Amrish. A short but effective chat. Thanks a lot for joining in and giving us that view. Let's do a quick recap then of markets today. The Nifty goes home with a gain of close to around 200 points, but at one point of time, we were on the verge of testing that 23,450 odd mark. Got rejected from the highs. There were a few stocks that bounced back. Ultratech Cement, Mahindra & Mahindra, Eternal, Grasim, Trent, all of them bounced back. Remember, these stocks have seen very, very aggressive selling, but they did fight back a little bit. The Nifty Bank recovered close to around 1,000 points from the lows of the day. Not a bad day to see the big boy put its hand up. HDFC Bank was quite strong in today's trading session. ITC as well was another name that did pretty well, and Axis Bank was higher. On the flip side, you had BEL that was lower in trade, and Max Health as well that did see some selling in today's trading session. Mangla?
Can't say the same about the mid-cap index though, Nigel. Even though we saw a swift recovery in the frontline end of things, the Nifty ending with 200-point gains, the mid-cap index still has some lack of confidence, and that reflected in the BSE advanced decline ratio as well. Over 3,100 stocks in the red for about 1670 in